Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ads at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call, that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice. Nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开口的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。
不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高。但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. and they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers. And it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming into our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Ina Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Ina wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
solar and wind energy were fully commercialized, there were a lot of amazing technologies implemented everywhere, I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded EcoWave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Inna and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act from this side. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in Nissan for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Pasi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, you know, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that, I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passi was tasked with investigating Carlos Ghosn. And he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hadi. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Passi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered for me the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the GOAN Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? You know, this is a car company. This is not the KGB.
I think it's fair to say that Rob Posse didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud. A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against JP Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place. The granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating now. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. Over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness. From my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. It seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s. When everyone had a nickname, his was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollars trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to, to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but there's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. They are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37, and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they've done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had is kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2,
if you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work, Nature Conservancy and many others see that the carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system. And you end up in sort of a race to the bottom. And that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, you know, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
the Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes. It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial, be like a sports car. Yes. We got up to about 108 miles an hour on that test. And it's a short run, it's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was like, is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So, for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure that different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe.
On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's been super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, you know, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world.
Yes, that's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Seeing weakness in the U.S. equity market today, a lot of concern over rising inflation. But if there's a positive, the major benchmarks are off their session lows. It's now 2 p.m. on Wall Street. I'm Doug Krisner at Bloomberg World Headquarters in New York. Higher oil prices are underscoring the concern about rising inflation. U.S. government data showing a drop not only in crude inventories, but in gasoline stockpiles as well. And at the same time, we learned today that crude oil production in the U.S. was unchanged for a fourth straight week. We've got WTI right now up by 2.8%, 122.70 in the regular session, which will wrap in about 30 minutes from now. Dow Industrial Average down about 0.9%. We've got the S&P weaker by about 1%, and the NASDAQ Composite is off about 0.2%. Earlier, Credit Suisse was warning of a second quarter loss, and then there was an indication that perhaps Credit Suisse may be taken over. The Swiss finance blog Inside Paradeplatz was saying that State Street possibly could make a move for Credit Suisse. ADRs in Credit Suisse right now down about 1.2%. State Street shares off 4.5%. Even before the news, we were told that Credit Suisse is in the process of considering some job reductions across a number of divisions as a result of the warning on a second quarter loss. The Securities and Exchange Commission will consider a plan to require brokerages to route retail orders for buying and selling equities into auctions. This would be part of the SEC's plan to increase competition in the market. And Tesla shares of the global EV market now only about 10% in the month of April. That's down from 24% in the month of March. Right now, shares in Tesla better by about 1.6%. In the bond market right now, we've got a 10-year Treasury yielding 3.02%. U.S. interest rates up across the entire U.S. Treasury curve. I'm Doug Krisner. That is your Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, live from the Bloomberg Interactive Broker Studio, streaming on YouTube. It is Hump Day, Wednesday, June 8th, 2022. Carol Masser along with Bloomberg's Quick Takes, Tim Stenovic.
Hey, that's me.
Can I hear that voice again?
My voice is getting better, but
You're going to get Creedy and I. We're going to just fall off our chair.
I think by tomorrow, say goodbye to this voice, because by tomorrow or Friday, it's going to be gone.
No, please, sexy, sultry, Tim Stenovic, don't go. Can I say that, or is HR going to come get me?
I hope you enjoyed your last show, Carol.
Well, speaking of last show, well, bye-bye two-day rally, S&P down, inflation fears combined with worries that rising rates will stifle economic growth, and the outlook for corporate earnings. Yeah, I've heard this story again.
Maybe Andy Jassy is going to weigh in on things, because we're going to hear from him. He, of course, is the president and CEO of Amazon. You've heard of that company. Yeah. It's an exclusive from the Bloomberg Technology Summit. That's coming to you in about a half hour.
We're also going to hear from Kathy Wood of ARK Invest. She just sat down with our Ed Ludlow fireside chat. They talked about a lot of things we've heard before from Kathy, but always interesting to see where she is, especially in a much tougher market environment for her.
We've got a great program today. 3 of the most read on the Bloomberg Terminal, Carol, including a Bloomberg exclusive on the latest woes over at Credit Suisse.
Yeah, they're having a tough time. Also a story that's the Bloomberg Big Take as well, the hedge fund that's borrowed billions now facing a reckoning. And then we've got America's bottom 50%. Tim, they've built a $3.7 trillion inflation buffer.
We've also got an update when it comes to inequality, how the black and white wealth gap is widening.
Yeah, not so great, and not so great when it comes to our oceans, but we're going to check in. It is UN World Oceans Day.
Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
Let's get to the Market Drivers Report. Sitting patiently by, and Creedy's no longer laughing, although as soon as no promises. She is in Creedy Gupta is markets correspondent at Bloomberg here in our Interactive Broker Studio, along with Abigail Doolittle, markets reporter at Bloomberg News. All right, Creedy, we just love to make fun of Tim because he's so perfect.
Oh my gosh, yesterday was even worse, and Carol and I were just
We
falling
were
out of our
dying.
chairs. It was so funny.
It was very sweet. And glad he's feeling better. So what do you make of the trade today? We're down after, 2 days of gains on the S&P 500. So it goes, right?
So it goes. I mean, I'm going to say something a little controversial. The story isn't in stocks today. The story's in FX. And I've been, banging on this drum all day long. But I think it's worth bearing in mind that the stock story is largely a tech story in my view.
Yeah.
You did see the turnaround, I think, come around 12:30 today. You did, of course, have a risk-off mood throughout the entire day, but around 12:30 you saw this kind of acceleration of losses. And if you actually looked at what moved it, it was once again the big tech heavyweights. And earlier in the session, you did have NASDAQ outperforming the S&P 500. A lot of that came from sentiment you saw in China perhaps sending a little bit of softer signal, saying that maybe we'll give our kind of big regulatory scrutiny a break, and investors taking it at face value. So you did see Chinese ADRs, for example, outperform. That fed into the NASDAQ, which then helped the S&P 500. But then once you had the NASDAQ say, well, actually, we're rolling over, the S&P 500 really didn't stand a chance.
Abigail Doolittle, come on in here, because certainly, I think it's fair to say that stocks can also be part of the story today when the S&P 500 is down a full percentage point. What are you watching?
Yeah, I would say, that you have inflationary concerns back at front and center with oil up 2.7%, inventories in the U.S. suggesting that there could be, a supply crunch. You also have yields higher. I think that the other thing is, though, you had the NASDAQ 100, those tech-heavy stocks, higher into about noon, and then at the Piper Sandler tech conference, SEC's chief, Gary Gensler, came out with these comments about, basically the government regulating trading to some degree. So I was speaking to Alon Rosen, head of derivatives trading over at Oppenheimer, and he told me that that's why the markets have rolled over, the stocks.
Is it the payment for order flow comments?
Yes.
Because we did see shares of Robinhood fell, Virtue fell.
And yesterday too, right?
Yeah, because it's not necessarily new, but I think he gave more color at at that conference.
Okay.
And these conferences, when they're basically, somebody speaking, and then folks in the audience can typically ask questions. So that headline for us crossed at 12:30. Market started to roll over at 12:22 or thereabouts. Not too precise, right? I'm not in TV. I don't think about minutes and seconds. No, obviously I do.
That is so true.
Yeah, I think that's a big piece of what's happening for stocks. But it's such a light volume day. Let's see. Maybe by the end of the day, things reverse in the other direction.
All right. So how are we all feeling? What are we just 2 days out from that inflation print? And as I think there was some story in the Bloomberg, they're like, the Fed doesn't really look at CPI. They really look at PCE. But nonetheless, it plays into sentiment.
It totally plays into sentiment, and it's not just sentiment here in the States, it's sentiment around the world. And I think all eyes on Friday around the world are going to be on American inflation. The question here is, you are starting to see this environment where there is low liquidity. You're seeing this environment where the Fed has made it very clear they're going to go hard, and they're going to go hard on inflation and tame it. The rest of the world's starting to catch up. But here's where I'm going to bring it back down to currencies. I'm obsessing with this today.
Yeah.
This is where the currency picture gets really hard, because you have to, as a currency trader, which, by the way, has ripple effects into commodities, bond yields, the dollar, the stock market, I should say. These are all, they're trying to basically manage or at least predict what these central banks are going to do next. To what extent is 50 the new 25? To what extent is QT going to be a bigger driver, as opposed to the economic fundamentals? So, for example, in the dollar, if you are buying a dollar, are you trading on what the Federal Reserve is going to do, or are you trading on the strength of the American economy? Those two are not the same thing, and that's what makes it really tough. Then bring in Europe, Japan, Australia. It gets even harder.
I would ultimately say that what the Fed does, they will be looking at all of it, and that will be shaping their decisions. It's a tricky point, right? And Abigail, I still feel like I wouldn't call a bottom yet. I feel like we just don't know until we get to some certainty about what comes from the Fed or when they're done.
Yeah, I think it would be hard to call a bottom for for stocks, or a top, inversely, for the dollar or for oil or
yields,
for yields. Right? Although yields, I probably, just from the technical perspective, would feel a little bit more comfortable saying that the 10-year has seen its high. But that's that might be a fool's business to say something along those lines. I think that there's just so much uncertainty out there in terms of a recession, potentially happening later this year. The Fed, are they going to talk about flexibility next week? There are some signs, I would say, in various charts that suggest that Maybe the CPI print is going to come in okay. Maybe the FOMC meeting, there's going to be something out of it that could be taken as somewhat dovish, but we'll see.
All right, guys, thank you so much. Really appreciate it. Kriti Gupta, markets correspondent at Bloomberg News on that FX beat, and we love it. Abigail Doolittle, markets reporter at Bloomberg News, both in our Interactive Broker studio.
Let's go to Washington, D.C. now for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Survivors, family members, and doctors who've recently dealt with mass shootings in Uvalde and Buffalo have been telling their stories today on Capitol Hill. Dr. Roy Guerrera, a pediatrician in Uvalde, says he took the Hippocratic Oath to do no harm, but others don't seem as committed to that premise.
Inaction is harm. Passivity is harm. Delay is harm. So here I am, not to plead, not to beg or convince you of anything, but to do my job, and hope that by doing so, it inspires the members of this House to do theirs.
Guerrera says he cannot figure out if politicians are failing us out of stubbornness, passivity, or both. The ranking member of the committee, Congressman James Comer, says knee-jerk reactions to impose new gun controls are not the answer. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. Well, Capitol Hill is also gearing up for tomorrow night's first public hearings on the January 6th Capitol riots.
The hearing will begin with testimony from a police officer who was injured by rioters at the U.S. Capitol on January 6th. Officer Caroline Edwards was injured in the assault and suffered a traumatic brain injury. This will be the first of 6 hearings by the panel that has been investigating the insurrection and what led up to the rioting at the Capitol building. It is scheduled to last for 2 hours, starting at 8 p.m. on Thursday. In all, the committee has interviewed or deposed more than 1,000 people. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So Abigail Doolittle just talking about this, and I think this is a really important story. We saw some of the trade certainly, or saw this story starting to impact the trade yesterday. Wall Street's top regulator previewing a set of sweeping overhauls to the rules underpinning the stock market, setting up a major clash with some of the biggest names in equity trading. We're talking about some comments from SEC Chair Gary Gensler.
Yeah, Carol, he said that he'd asked the agency staff to weigh the moves with the aim of making the $45 trillion U.S. equity market more transparent and fair for retail investors. His plans could directly impact how firms including Citadel Securities, Virtue Financial, and Robinhood Markets, among others, process many retail trade orders.
These were in remarks for an event hosted by Piper Sandler today. The possible changes outlined by Gensler would require 2 votes by the agency's commissioners to take effect. If enacted, the plans could mark the biggest overhaul for the U.S. stock market in more than 15 years and the agency's most direct response yet to last year's wild trading in GameStop and other meme stocks. I mean, this could be big.
It could be big. Gensler rattled financial firms last year when he refused to rule out prohibiting the practice of brokers getting paid to send customers' stock orders to market makers as part of the agency's rule changes. That is known as payment for order flow. Well, the SEC chief on Wednesday stopped short of calling for an outright ban on the practice. Gensler said he'd asked staff to find ways, quote, to mitigate conflicts of interest that he says are inherent to the arrangements. We should note that payment for order flow is what allows companies like Robinhood to offer free trading because they sell that data to other firms. It's interesting because, I don't know, I just think the idea of having something free and available to you, what are the incentives? How does that misalign incentives with sort of good financial behavior when it comes to these platforms?
I mean, these are questions
if
that
it's
have
frictionless,
to be asked.
completely frictionless, if you can pull this phone out of your pocket and trade that easily, is it necessarily a good thing?
Yeah, I know. And these are the questions, right, as these new platforms come out. Having said that, shares of Robinhood, we've seen some selling. They were down more than 4% yesterday, down another 2.5% in today's trading. So there is certainly some reaction. And we heard from Abigail Doolittle getting commentary that's saying that this is what helped bring the market lower overall today. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is very near its worst level of the day. We've got the S&P 500 down about 1% right now. A lot of the interest rate sensitive stocks are moving lower today. It's kind of interesting, too, that financials in that mix because U.S. interest rates moving up across the entire U.S. Treasury curve. But we're seeing weakness among utilities and real estate shares. Dow Industrial Average off about 0.9%. NASDAQ Composite is down about 0.7%. Higher oil prices certainly underscoring the high. Crude right now is up 2.9%. We're trading 122.85. Earlier, the government reported a drop not only in crude inventories, but in gasoline stockpiles as well. And as I mentioned, the move up in rates on the short end of the yield curve, 2-year Treasury at 2.76, a 10-year at 3.02%. Twitter's board has reportedly, or will reportedly plan to comply with Elon Musk's demand for internal data. The Washington Post saying this data could be provided as soon as this week. Shares in Twitter right now higher by about 0.9%. And shares in Western Digital right now down nearly 3.5%. We are told the company will consider splitting its main units after talks with activist investor Elliott on a review of strategic alternatives. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Brokers studio. A couple stories we want to get to. We mentioned Gary Gensler certainly seeming to impact the markets today. We'll get to that in just a moment. And our most read story on the Bloomberg has to do with Credit Suisse Group, weighing a fresh round of job cuts, part of a renewed push to cut costs, really slash them, after warning of a second quarter losses, according to folks in the know. And then you've got State Street being kind of mum when it comes to might they make
Where do we even
a
start?
bid for Credit Suisse?
Where do we even start with Srinath Rajan?
I don't know. Let's talk about the Bloomberg exclusive.
Okay, Shree's finance reporter for Bloomberg News. He's with us right now in the Bloomberg Interactive Brokers studios. Shree, I want to talk about this Bloomberg exclusive Credit Suisse weighing new job cuts around after a loss warning. What's going on at Credit Suisse?
What isn't going on? No.
Exactly. I mean,
that's the problem.
We've been into a stretch that's frankly gone on for a few years at this point, where all we seem to get is gloomy headlines out of Credit Suisse. Someone mentioned this might have been their 6th profit warning in 7 quarters.
Wow.
That sounds pretty bad. We had a story just yesterday where their head of investment banking and capital markets said he's been running around all year telling clients, we are back. We are 44% of the firm's revenue, and that's why the firm is committed to us. Less than 24 hours after that, the bank comes out and issues another profit warning, says it's going to be a 3rd straight quarter of losses, and in part blames the problems in investment banking. We've seen advisory fee fall off a cliff. They say the trading environment is challenged, which some of their U.S. rivals would say is a little bizarre because they've been calling it good volatility that's helped their trading desks. So analysts out there are actually willing to go out and stick their neck out and say it might be more of a self-inflicted wound. But this followed by previous missteps, the uncertainty around the CEO, the Archegos and Greensill scandals. And that's not even talking about the fact that the new CEO, Thomas Gottstein, who took over in 2020, got into that seat after the previous CEO, Tidjane Thiam, was ousted over a spying scandal. So this is a problem that has been going on for a while, and Credit Suisse really needs to do something to regain the faith of investors.
I find it staggering that you had a story yesterday, right, with the head of investment banking who seems positive, and then for it to be less than 24 hours later for this story to come out. Is that right hand not talking to left hand, or what is that a sign of?
It certainly doesn't seem like a strategy, because that would be bizarre. So one has to assume that there really wasn't an understanding that they would have to issue such a stern profit warning, which is problematic. You can't have someone as senior as David Miller, the New York-based banker who runs their M&A, DCM, ECM, who's saying he's out there talking to clients, who's conveying to markets that Credit Suisse is really committed. Yes, there are a lot of negative headlines, but they've had to fight off misperceptions in the past and misconceptions in the past, and they will do it again. That's what they're telling clients, and that's what they want the Bloomberg audience to know. So when within a day of that you come out with that announcement, it's of course going to lead to ridicule across the street, right? People are going to look at it and say, do they really have a handle on the scale of the problems?
Where's your credibility when it's already, just been broken to pieces?
Well, that's what I wanted to talk about was the reaction on the street because, and you've reported on this a lot, the talent wars that are happening with banks. What does it mean to attract and retain talent at Credit Suisse right now, given all the challenges that the bank has?
I have to assume it's difficult. If you asked me yesterday, and if you read the story yesterday, we would have said, look, they're acknowledging the fact that last year they lost about 69 managing directors, which at Credit Suisse is the highest rank, which is a lot of people to lose. But they were also on the front foot saying, we are out there talking to the street. We've hired 55 managing directors since the start of last year. We have plans to hire another 40 MDs or so. So they're out there saying, don't be overtaken by all the bad news. We're actually willing to fight back. There is a rebound trade happening here. But then again, when they have to come out today and announce another quarter of losses, the stock immediately tanks 7% off that headline. If you're really talented, if you're really experienced, and if there are a lot of other seats on Wall Street that are happy to take on good, talented people, what's the thesis for sticking around?
Yeah, exactly, right? If you're contemplating some job offers, Credit Suisse is among them, but you've got some others, you might be like, I'm not so sure about this. Hey, our most read story, we said this is our most read in the past 8 hours, the Credit Suisse story. In the past 60 minutes, there was one about State Street. That's share price falling after declining to comment on a report that's looking to acquire Credit Suisse. How do you throw that into the mix?
Look, off the bat, it's impossibly hard to say at this point whether there is a credible bid coming from State Street for Credit Suisse. The only reason we're talking about this is a Swiss blog reported earlier today that they plan to make an offer for Credit Suisse at 9 francs a share, a little more than where the Credit Suisse shares are trading right now. But on the surface, it also sounds a little bizarre. Why would State Street be interested in all the mess around the investment bank and its Swiss wealth management business and whatnot? But, it's not hard to fathom that they might be interested in parts and pieces of Credit Suisse, like asset management. But again, we're in complete speculation territory there. But when there is so much noise around Credit Suisse, and when you have a blog like that come out, people are immediately interested in seeing what the reaction is. And you don't normally have companies commenting on targets, and State Street did what would otherwise on any other day be considered normal action, which is say that they really are not going to comment on the press reports out there, especially on takeover speculation. But even a denial or a non-denial or like a nothing statement can cause heartburn, as seen in the State Street stock, which is down about 5-6% when they put out that comment, just because people are worried if they're not denying, are they really interested in taking over this problem child that's Credit Suisse?
Shri, in the last 30 seconds that we have with you, got to get your take on the SEC Chief Gary Gensler taking aim at payment for order flow and his other market-moving comments in the last 80 minutes.
It's the classic story that's played out over the last 18 months, retail versus institutional. Is it a level playing field? Is it not? Gary Gensler is going out there saying he's a champion of the masses. He wants to make sure that there is no rigged market, although market experts and those who have been in this field say hasty decisions and hasty rule making could actually make the situation far worse than what it is today.
Yeah, you do wonder about, right, how this complicates things. Thank you so much. Our own Sri Natarajan, he is, of course, Bloomberg News finance reporter, breaking down that Credit Suisse news, as well as those comments from SEC Chief Gary Gensler.
Well, let's now go to Washington, D.C., where Jody Schneider is standing by. She's political news director for Bloomberg Television and Radio. She joins us from our Bloomberg Washington bureau. Jody, good to have you with us on a really important day because we're thinking a lot about not just what's happening in Washington, D.C., but primaries around the country. Yesterday, progressive Democrats in California losing out big when it comes to elections in San Francisco and in Los Angeles. What are the primaries that we need to be paying attention to?
Yeah, and that was a big one. Isn't it interesting? We had primaries in, I think, like 7 or 8 states, and what we were paying attention to was the mayoral race in California. But that race was, first of all, one of the most expensive races in history, maybe perhaps the most expensive mayoral race, and it was a primary, just so much money spent there. But Karen Bass, Representative Karen Bass, really was hurt by these concerns about going back 2 years ago now about these defunding the police. These kinds of things are really dogging progressives now, especially when they have a moneyed opponent, and this billionaire opponent basically said to Los Angelinos, do you want to be protected? And crime is up in LA and in many places in the U.S., and that was what it came down to. And the same thing in that San Francisco race too. So it was a bad day for progressives. Wasn't a great day for people on the ballot who Donald Trump supported as well. We've seen him do well in some of these primaries. The people he's backed do well, but last night wasn't necessarily the case.
Well, and so if you had a net of what did we learn from Tuesday's primaries, what would you say to our audience?
Yeah, I would say that some of these progressives are going to have a hard time on this crime issue, where it's made an issue. Those whether they were saying defund the police anymore in their campaigns, the fact that this came up 2 years ago, after the Minneapolis riots and all of that, it really is it's going to be a real problem for them, and a problem for the party in terms of trying to hang on to some of these seats where they get an opponent who's going to make that the issue. The other thing is Donald Trump is not, having Donald Trump as your endorser does not, depending on where you are and what race you're in, it does not necessarily guarantee you a win. It didn't guarantee these primary wins, and it may not guarantee some of those general election wins come November, even for people he supported who won their primaries.
That's what I wanted to see. Could we make the jump? Here we are in June about what happens then in the midterms, Jody?
Yeah, I think, like anything, first of all, in the House, we have to remember in House races, people partly run on local issues and on constituent service. So that's often that factors in as well. But in Senate races, where you're running statewide, some of these other factors are going to come into play. Inflation certainly is going to be one of them.
Jody, we got to talk about what's happening in Washington, D.C. today with survivors of Uvalde, the shooting just a couple of weeks ago, testifying in front of lawmakers. The House is set to hold a gun vote as bipartisan Senate talks continue. Give us an update about what's happening.
Yeah, we've had really some just emotional moments, both at the White House press briefing yesterday with Matthew McConaughey, from Uvalde, basically saying we have to, we have to do something speech. And I, as a gun owner and a son of Texas, I'm here to tell you I want something done. Very moving, very emotional. And then today that testimony, just heartbreaking. You can't watch that and think it's not going to matter. And it's very interesting because right after even this, the horrific school shooting, there were people who said, no, it's not going to go anywhere. Sorry, it's very sad, but there's not going to be gun legislation passed in Washington. And now, a few weeks later, it's a very different tone. Now, it will likely be very limited legislation, and that's where the negotiations are now. Is it raising the age to 21 to buy the semi-automatic weapons? Is it red flag laws or some sort of red flag law? Everybody's agreeing it will likely be something very limited if they can get past these negotiations to get on the floor of the Senate to get at least 10 Republican senators to get past a filibuster threat. But there's real talks, and there's some sense that they could come up with a package, a negotiated package as soon as this week and get something on the floor of both chambers next week. The House has passed much more far-reaching legislation, but that's a non-starter in the Senate. The Senate would start with this likely limited legislation and then send it over to the House.
All right, we are, of course, talking to our own Jody Schneider. She is Bloomberg Television and Radio political news director, and just on some of the news coming out of the nation's capital as we speak. Hey, just want to quickly get to you. Tomorrow's January 6 hearings, 8 p.m. prime time.
That's right, prime time. These are the first of the hearings. We're going to see a series of them this summer. As a matter of fact, Monday will be the second hearing, so they're really, racking them up here. But the first prime time one is meant to be, it's really going to be political theater. Let's be honest about it. Yeah. It's very well produced. It's not going to have live witnesses, but it will be in prime time, and the networks are all taking it. So it'll be theatrical.
Got it. Jody, thank you so much. Right now, though, at the Bloomberg Technology Summit in San Francisco, Bloomberg's Emily Chang sitting down with Amazon President and CEO Andy Jassy. Check it out.
If you look at during the pandemic, which really has extended till the early part of this year, so much of the PPE and food and essential items and people equipping their home offices were bought from Amazon. And to scale the way we needed to. Remember, in 2020, we grew 39% year over year on a $245 billion revenue run rate. I mean, it's unprecedented. It's never happened before. But it was really hard to do that. And we had to take the really big footprint, fulfillment center footprint we built the first 25 years of Amazon and double it in 24 months. And we built a transportation network, which we planned on doing over several years, but because we weren't going to be able to get enough capacity at the cost structure we needed to serve all the big demand in 20 and 21, we built out that transportation network in just a couple of years. We nearly doubled the size of our workforce during that time, and we still didn't have enough people to receive all the items in our fulfillment centers and to ship them. And so we had to make decisions. We looked at, we didn't have enough people to receive them in the right spots to get them to customers as cost effectively as we normally did. And so we decided, do we just allow ourselves to be out of stock with much longer delivery times, or do we stock them wherever we can, even if it meant we're going to have to pay for a lot more transportation costs to get it there? And in all of those cases, we sided on the side of customers. And I think customers really appreciated it. And I think you saw it in other businesses. AWS is a really big part of helping companies and governments have business continuity during the pandemic. And so many companies and organizations in the last year made the strategic decision that they were going to stop running their own infrastructure technology and disproportionately chose AWS to help them move to the cloud. And we've spent a lot of time helping them make that transformation. So I think we've done a lot of good for customers, and we have always sided on the side of customers.
So what about investors? I mean, the stock is down significantly from a peak last year.
Yeah.
Obviously, there's broader market turmoil.
Yeah, I think, for investors or financially, I'd say it's mixed. I think we have some businesses that are growing really strongly. If you look at AWS, in 2021 grew 37% year over year. It's on a $74 billion revenue run rate business, which is pretty unusual growth. And we grew 58% year over year in our advertising business, which is a $32 billion revenue run rate business. So some businesses growing really strongly. And we've continued to grow in our retail business despite pretty crazy comparables during 2020. But I think the real challenge for us there is on the cost side. And there have been several things that have happened, some of which are more controllable than others. I think the part that's less controllable is really around inflation. And I think we thought that inflation would start to attenuate in 2022. And with the war in Ukraine, it just went the other way and has significantly accelerated. And so the cost of trucking and line haul and ocean and air and fuel has just substantially gone up. And I think that will attenuate at some point. No one knows how long that'll take. I think the more controllable areas for us are really around fulfillment center capacity and productivity. And I think on the fulfillment center capacity side, it was taking about 24 months to build new fulfillment centers during the pandemic. And so we had to make decisions, in mid-2020 and early 2021 on how much demand we were going to plan for. And the team made a decision, which I think in retrospect was a good decision, that we were going to build to the high side of what we could imagine consumer demand being, because we didn't want to constrain consumers or sellers who were trying to place inventory in our fulfillment centers for fulfillment by Amazon. And so, we end up with more capacity than we need right now. And there's a number of things that we're working on. We've stopped building on properties where we don't need it yet, and we've let a number of leases lapse, and not a small number, of both those things. But, we are very confident that we're going to grow into that cost structure on the fulfillment center side. And we decided that if we were going to have to err one way, we'd err on the side of customers, even if it meant short-term trouble for us or challenges for us. I think on the productivity side, what I would say is that when you build as quickly as we did in the fulfillment center space and the transportation network, you're always going to have areas that you can optimize and be more streamlined in. And that's true for us. And we've had a lot of occasions in our history where we've worked on productivity and made improvements. And we have a lot of clearly defined initiatives, and I'm confident we're going to get back to the right level of profitability.
You are going to sublease 30 million square feet of space. Is there a mistake in the execution there because of the overbuild?
Again, because you have to make these decisions 2 years in advance, and again, if you put yourself back in 2020, where we were growing 39% year over year on a $245 billion revenue run rate, it's very hard to know what's the right amount to build, and you have to make a decision. And we made the decision to err on the side of our consumers and sellers. And we knew it might mean that we might have more capacity for some short period of time, but we were willing to do that because we're always long-term oriented and customer focused.
Now, how would you grade Amazon's performance with employees, your colleagues? There has been some high-profile turnover.
I think that when I started in this gig, we had just created a new leadership principle to strive to be Earth's best employer. And I think we've spent a lot of time trying to think through what that really means. It's broad. And I think we've made a fair bit of progress, but it's still early, in my opinion. I think Amazon in general is an unusually compelling place to work. When you have a mission, which is to make customers' lives better and easier every day and relentlessly invent to do so, it's inspiring. And if you layer on top of that we not only make customers' lives better, but people get to work on a scale that's nearly unprecedented given the nature of Amazon's business, with a culture that likes to invent and is willing to move fast on its ideas and willing to be long-term oriented, which means if you want to leave a mark on the world that outlasts you, you have a chance to do so. That combination is really unusual, and I think it's why we rank high in a lot of the polls on great places to work. But I still think there are many areas that we can keep improving, and I think, the first one I'd mention is safety. I think that, in our fulfillment centers, that is the top priority. And, when you get into the details of the numbers and outside of all the spin of it all, we're about average there, but we're not trying to be average. We want to be the best in the industry and the best in the world at it. And that's a high priority and an area that I'm passionate about and the team is passionate about. I think we've made a lot of progress in over the last several years, including last year, on diversity and inclusion. But to really get to where we want to get to, I think we have a lot of work to still do there. We have a very strong set of managers in Amazon, but we have grown so much in the last 10 years, and we have so many new managers, many of whom we have promoted internally. And we have management training programs, but I think you've got to kind of retool those things to really make sure that you have managers who are developing your teammates the way you want. Managing is a privilege. And so, we've spent a lot of time in the last number of months refining our management training programs that you'll see us rolling out. And then I also think that our services and tools to our external-facing customers have outpaced those for our internal employees. Mm-hmm. And I think we have a lot of work we can do to make our employees' everyday lives easier. And we've identified kind of a top 100 list of areas that we can be better at, that we are just metronomically stepping through. And so we've made a lot of progress, but we have a lot of work to do still.
Dave Clark just announced fairly abruptly that he's leaving Amazon after 23 years. He has been described as an absolutely integral member of the S team, knew the logistics and fulfillment center network better than anyone. Just announced he's going to be co-CEO of Flexport. What happened with Dave specifically, and were you surprised?
Well, I think different people want to do different jobs with different responsibilities at different times, and it's incredibly personal. And I think Dave wanted a different gig at this point, and I don't begrudge him at all. I mean, Dave has added so much to Amazon over the last 23 years, and particularly over the last 2.5 years, which have been among the most crazy in the history of Amazon. And I think that if you want to build a business that lasts 100 plus years, and that lasts all of us, you have to get used to these sort of transitions and make sure that you're doing the right succession planning and you've got the right talent to keep building the business. And we've done that historically, and I expect we'll do it again.
Elon Musk just came out saying he has a super bad feeling about the economy. Tesla laying off 10% of his staff. Jamie Dimon says he's preparing for an economic hurricane. The World Bank just slashed its forecast for global growth. How do you feel about the economic climate?
Well, I wasn't planning on giving any guidance today.
Please.
But
super bad or super bad?
I think there's some things as it relates to Amazon that are useful to remember. I think the first piece is, remember that 85% of the worldwide retail market segment share is offline. And if you believe that that equation is going to flip at some point, which we do, I think it will flip over a long period of time. But if you believe that, the companies that have great customer experiences like we do, I think are gonna do all right. And great customer experiences mean you have really broad selection, low prices, and very fast delivery that's reliable to customers. I also think that if you look at different downturns, should we have one at some point? And we've been through a few, obviously, in the 25 years that I've been at Amazon. Customers change their habits. They tend to be pickier about what they buy and when they buy and who they buy from. And they often pick the partners and the companies that they trust, and that have great customer experiences, like the dimensions I mentioned earlier. And so, I also think there's, those two reasons, those two factors give me some optimism that even if we have a downturn, that we have the potential to still grow. I would say that regardless, though, we have so many things that we believe we can do better for customers. We have a roadmap that's, probably 3 to 5 years long, and we're going to continue to invent. We're going to continue to be insurgent, and we have a lot of work to do to get to where we think we ultimately can get for customers.
So let's talk about that. The theme of this conference is moving forward. What are the moonshots at Amazon that are capturing most of your time and attention? What is going to define the next era of Amazon? I mean, is it Astro the home robot, or is it something else?
Well, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business. And sometimes that leads to innovation and investments that seem pretty obvious. Like, when I got to that company, it was a books-only retailer, and then we expanded to music and video and electronics and toys. That seemed obvious to people. Other times, that process does not lead to investments that seem obvious to people. I mean, AWS was something that people externally and internally thought was a little bit nutty at the time. But just imagine what Amazon would be today without AWS. And I think that you see the same thing here. There are so many significant investments we're making that I'm excited about. I'm going to have to constrain myself to a few. But I'm really excited about what we're doing in the Prime Video space. I think we're clearly on the right track there and building a significant business.
That's interesting because Netflix also just announced some layoffs, first subscriber loss in a decade, Disney cutting back on costs. Do you see Amazon's strategy as fundamentally different from Netflix and Disney, and if so, how?
Well, we're very bullish on it, and remember, all the models are a little bit different, but for Prime Video, we have 200 million plus Prime subscribers who are, get that entertainment for free by being part of Prime, and so we have a little bit different pricing model than some of the others, but I'm incredibly encouraged by what we have coming. If you look, we launched this show Reacher earlier in the year. It was a huge hit. We had the new Maisel season. We just launched the new Boys season, which is off to a great start.
Are you a big Boys fan?
I am a big Boys fan.
Is Amazon bought?
It's very good. Of course, we have Lord of the Rings coming up, in September, and Thursday Night Football. So I'm very bullish about it. We also, we're excited about what we've done with MGM. I think some of the assets there will go very well with the rest of what we're doing entertainment-wise. We have an ad-supported channel there, or platform there in Freevee, which I think is appealing. And we have a channels business, which is also a little bit different, where third-party streaming companies will ingest all their content in channels, so they get kind of the leading viewing experience that we've built over a number of years. And then they get to sell monthly subscriptions as a channel to our 200 million plus Prime subscribers. And so if you look at Warner Brothers Discovery and Paramount and Starz and Global, they're building really significant subscription businesses. So I'm very bullish about that business. I'm optimistic that we have a chance to build a significant grocery business, which is early stages for us. I am excited about Kuiper, which is our low Earth orbit satellite that we're building. You got to remember there are 300 to 400 million people in the world who have limited to no internet connectivity. I mean, just think about how different the world is when you don't have that type of connectivity. And so I think that's a really significant opportunity that has some AWS characteristics to it. I continue to be very optimistic about Alexa, building the world's best personal assistant. We have 200 million endpoints already that are using Alexa. We're clearly onto something there. And then, our autonomous driving, ride-hailing service and Zoox that we're building, here in the Bay Area. I just think with the way auto consumption is evolving, I think that also has a chance to be a really significant business. Now, I don't know if all of them are going to be successful, but if any one of them becomes the fourth pillar for us on top of Marketplace and Prime and AWS, we're a completely different company, just like we were when AWS became successful. So I think they're very worthwhile investments and bets, and I'm optimistic about them.
You didn't mention Astro, obviously, though, powered
You
by
mentioned
Alexa.
Astro, Emily, yeah.
But, I mean, our home robot's going to
Do you
be
have an
zooming
Astro
around.
yet?
I don't yet. Where is it? It's not
Yeah.
really widely available for sale. What's the status?
I'll help you get one.
Okay. Thank you. Everyone's very curious about Jeff's role these days, what kind of executive chair he really is. He said when he left that he'd focus his attention and energies on initiatives that he really cares about at Amazon, but from the outside, it looks like he's really focusing on philanthropy. He's focusing on space. What kind of an executive chairman is he?
Well, Jeff is always going to be involved, and he has, I feel very lucky to have been at Amazon for 25 years. I feel very lucky to have worked directly for Jeff for 20 of them. And we have a really close relationship and have for a long time. And I think we share a lot of the same values about customers and how important it is to optimize for customers and how high standards they need to be, given how easy it is for people to switch and the importance of invention and speed. And so, I just feel very lucky to have had the chance to work so closely with him. We still talk all the time. It's very useful for me to be able to seek his counsel. He did the job for so long, and he's always made himself available.
So is your relation, I mean, he was your only boss for 25 years, right? Is
20.
your relationship fundamentally different than it was when you were the head of
Yeah,
AWS?
of course. Every single job you have, the relationship's different. Remember the first couple of years I worked for Jeff, I worked as what we call his shadow then, which is really like a chief of staff. And that was different than when I was starting AWS, which was different from when we got AWS going. And it was, a business that was starting to do well. And it's different when I'm in the CEO role. But, the constant has always been that we have a great relationship and we collaborate really well. And I think that we listen to one another. And again, for me, to have the ability to bounce different things off of him and seek his counsel is very valuable.
And he's still focused on Amazon?
Yeah, he still is focused on Amazon, yeah.
Amazon is poised to become the biggest private sector employer in the world. Second only, right now Walmart is in that spot, but Amazon will probably soon surpass it. First vote to unionize at an Amazon warehouse. I know you've been spending a lot of time at warehouses. When you look at someone like Chris Smalls, who I think some people look at as this modern day hero who got fired, pulled off this union vote, what's your message to someone like him? Your message to the folks who think maybe we should join a union?
Well, I think that the first thing to be clear about is that employees get to make that choice, whether they want to have a union or not. They always have had that choice, and it continues to be their choice. And we happen to think they're better off without a union for a number of reasons, including the fact that it's much harder when you have a union to have a direct relationship with your manager and to get things done quickly. So if you see something on the line that you think could be better for your team or you or your customers, you can't just go to your manager and say, let's change this. There's a whole process in bureaucracy that you have to go through to be able to do that. And we get, when there's a union, we're going to get the feedback filtered by what the union decides is worth bringing up. And we'd much rather hear from every employee whatever is on their mind. And so, I think if you want to continue to have the structure that we've had for all this time, you have to have really competitive benefits. And then I think if you look at Amazon's, they're very unusual in this space. We championed the $15 minimum wage several years ago. the starting salary is now over $18 an hour, which is more than double the federal minimum wage. You get full health insurance and 401k and 20 weeks, up to 20 weeks of parental leave. And if you want to get a college education, you haven't had one, we have a career choice program that lets our fulfillment center associates be able to do so. That is a very unusual and compelling set of benefits, and those were all accomplished without a union. So, I think that we realize that we have to continue to work on the relationship. We have to continue to work on the relationship with our employees, and we need to continue to provide the right benefits, and we need to continue to work on safety, and that's our intention.
The FTC has revamped its antitrust inquiry into Amazon, and by some accounts is accelerating it. Are you preparing for an antitrust lawsuit from the FTC?
I think that if you are a large company that's growing to a significant extent like we have, you have to be prepared to be scrutinized. And we have known this for some time, many years. And we have tried to run the company with that in mind and knowing that if somebody looked, that we would stand up to that scrutiny. And I think that's what we've tried to do in running the business. We can't control what, whether organizations bring different suits against us, but I think if you look at our business, if you actually look at the fact, if you take out of the equation that there may not be the most objective, leadership when it comes to Amazon in that organization, if you look at the facts, in our retail business, we're about 1% of the worldwide retail market segment share. And remember, 85% of it is still offline. And if you look in our AWS business, we, depending how you measure it, 95% of the worldwide global IT spend is on premises. And then we have a cloud business, and then we have a portion of that. We have a leading market segment share in the cloud part of this, but we operate, who we compete with in AWS is really on premises IT in addition to the cloud. So, these are relatively small percentages of the entire pie, and you can kind of step through all the businesses. And I think simply because you've been successful in a few different businesses doesn't somehow mean that you have unnatural market power. It just means you've been successful in a couple different customer experiences, but we still have a relatively small amount of market segment share in those areas.
What about the SEC? You're being sued by them over third-party data and how you've used it. Do you think in the past Amazon made mistakes with letting employees internally see how those third-party sellers were doing?
We have pretty good control. I mean, we of course disagree with the premise of that, but I would say that we have very good controls with respect to the data that different employee sets are able to see. And I think if you look at sellers, we have about 2 million small and medium-sized sellers who sell in our marketplace. And by the way, I think that we can be better for sellers. I think that we can have better tools for them to get started. We can have better tools for them to manage what they're doing across their different Amazon units. I think we can communicate better. There's a whole bunch of things we can do better. And we agonize over every single email or communication we get from sellers that's critical or where they're unhappy. But we also, we get many thousands of very positive emails from sellers, and we do very regularly robust surveying, and a lot more sellers are happy with Amazon than unhappy with Amazon. And I think if you look at what they're able to do is, as a business, by virtue of selling on Amazon versus not, it completely changes what's possible. Sellers don't really long for e-commerce software. That exists in lots of places. And it's not very expensive. What they love about selling on Amazon is that they get access to our hundreds of millions of customers, and that completely changes what their prospects can be in terms of the businesses they're building. So we have a lot of work to do there like we do in a lot of other places, but I think we have a very strong partnership with sellers.
What's the view of the supply chain right now, and how much pain there is going to continue to be, and for how long?
Well, I think that there's a lot of challenges in the supply chain still. I mean, it's gotten better than it was, but there are all sorts of challenges. Non-perishable goods, electronics, chips is still a really significant issue for all sorts of businesses. And so I think most companies are are working really hard to overcome those challenges. In our case, we have tried to order significantly ahead of when we normally do, which again might create risks financially, but we're going to do it on the side of customers. We have worked really hard to open a lot more points of presence and ports and to increase our capacity in getting products in. But I think it's going to be something that companies battle with for some time.
What's some time? 6 months, a year?
I don't
2
know.
years?
I don't know the answer to that. But I don't think it's imminently going away. I think if you look at some of the challenges that we have around capacity, that inflation worsens, I don't think it's around the corner.
Now, when it comes to the stock, as I mentioned, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued? And this also, of course, matters to employees who are significantly paid in stock.
Well, I haven't been at Amazon for 25 years. I arrived at the company 3 weeks before we went public. I have never tried to predict what the stock's going to do, and any time I've tried to a little bit, I've been wrong. So, I think it's pretty hard to predict what it's going to be in any short period of time. I do really believe that Benjamin Graham maxim that in the short term the stock market tends to be a voting machine, in the long term it tends to be a weighing machine. And I think if we've been through a lot of points in 25 years of being at Amazon where the macro factors are off and stocks are down, our stock is down, but you can't really control that. We have a concept we talk about a lot at Amazon, inputs and outputs. And the ultimate output for a company is share price. And then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so in these types of circumstances, you have to focus on what customers care about and building for them in the long term and inventing on their behalf. You got to get your cost structure in the right spot. But if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again. I have, as you could probably tell, a lot of optimism for, and I'm an optimistic person, but I also, there's this Foo Fighters song called Congregation that has that line, you need blind faith but no false hope. So I do have blind faith, but I also think I don't have false hope. I have a lot of data and I think insights internally where all of our businesses are on the right path. But if you measure at any one point with lots of things happening around you, you may not get to the same conclusion that you get to long term.
You made a huge mark on Amazon with AWS, obviously. What is the mark that you want to make still on Amazon? I mean, in this new role, what's going to define the Andy Jassy era?
Well, I don't really think of it that way, Emily. I mean, I don't think it's really about an Andy Jassy era or any one person. And by the way, AWS was not about any one person. That if you've spent any time on AWS, that is an unbelievable team, not just an incredible leadership team, which it is, but just top to bottom, the number of inventors and people who care about customers and operate, something where it has to work almost like a dial tone. It's always teams. And so what I'm hoping for over the next number of years is really what really unites all the parts of our business, which is we exist to make customers' lives better every day and easier every day. And we're going to keep inventing to do so. And so I look at every single one of our businesses and, take our retail business or our consumer business, which is the oldest of our businesses, 85% of it still lives offline. I think we have a lot of upside and a lot of growth. And I think as much invention as we've seen the last 25 years, the time I've been there, I think that it's going to look small compared to the next 25 years. There is a lot for us to invent on behalf of customers. And so, I'm excited to be part of the team that makes that happen. And, I also think that there's a lot we can do as we continue to make Amazon a place that employees love working at, and it's the place that they can best build their career at. And I also think that you've seen some of this last few years, but increasingly, we are continuing to, to increase the amount that we give back to the communities in which we have a big presence, and that really matters to me. I think we have a responsibility to do that, and so it's a long journey that we're working on, but I'm excited to be part of it, and I hope to be part of it for a long time.
Well, thank you for joining us and telling us about the way the journey is going so far.
Thank you for having me. I appreciate it. Thank you.
That, of course, was the Amazon CEO, Andy Jassy, speaking with our very own Emily Chang, and talking about what seems to be a supply chain constraints that are not imminently going away. We discuss inflation as we count you down to the close. 60 minutes less than left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa and Tim Stenovic, as we together welcome across TV, radio, YouTube our audiences to dissect what Andy Jassy called the, voting machine versus the weighing machine that is the stock market. And right now, the stock market is weighing a little bit lower, Carol.
Yeah, a lot of optimism from Andy Jassy, although he did talk about chips still seeing some constraints. And I noticed the semiconductor index still down about 2.6%. So really kind of a negative tone. Where there is optimism in the trade, check out once again those Chinese names that trade in the United States. They're up more than 5% in today's trade. And we've seen quite a bounce, up more than 50% since mid-March. So again, we know the news out of China, Chinese officials okaying another round of video games. So we continue to see the country's stance toward those internet firms softening, and we continue to see investors move into him.
Yeah, I'm still thinking about Andy Jassy's interview with Emily Chang just now. I was struck by what he said about challenges on the cost side of things. He thought that inflation would attenuate in 2022, but then out of nowhere to many people came the war in Ukraine, Russia's invasion of Ukraine. And he said as a result, they're paying more for fuel, of course, just like everybody else is. The cost of freight has gone up, the cost of shipping has gone up, and of course, the cost of air freight has gone up as well.
And inflation is exactly what weighs on the investors' minds today. That probably pulls the overall benchmarks lower, worrying about the CPI print on Friday. We're looking towards how the ECB responds itself in Europe tomorrow. We look at the S&P 500 off by more than a percentage point at the moment, 47 points lower on the S&P 500 right now. And volumes just nowhere to be seen, off by about a quarter versus your average. We're looking at a 0.9% decline in the Dow Jones Industrial Average, 0.8% down on the NASDAQ. Big tech, Amazon also in the red today. And Russell 2000. Significant underperformance there, down by 1.7%. That is 33 points lower, Taylor.
Most of the sectors as well in the red here, -1 in the green, communication services, but everything else really tilted here to the downside. Real estate, materials, utilities, industrial sort of leading the leg lower. You're off anywhere from about 1.9 to 2.5%. Remain, though, the second best performer. It's still in the red today, but it's energies. We were talking about crude near 120 still, and ExxonMobil, I think, at another record high.
Yeah, I mean, ExxonMobil actually did trade, at least on an intraday basis, did actually cross that record high, going back, of course, to its IPO back in 1980, off of those highs just a bit, but still higher by about 1%. And that's pretty much one of the few bright spots that you have, at least as far as the individual stocks go. A lot of talk right now about what's going on in the shipping space, particularly with some of not only the shipping companies at those ports, but the truckers as well. Zim Integrated having a rough day here, down about 14% on the back of that. It's a big part of the reason why you're seeing a lot of folks in the transport industry right now lower. In fact, the Dow Transports as a group down about 4%. Robinhood and the rest of the companies sort of in that space, in that investment space, are moving lower. Robinhood down 3%. This, of course, on the back of that report about the SEC rolling out new rules here that would apply primarily to retail traders. Unclear exactly what type of effect that would have, but you're seeing Robinhood, Virtu, Schwab all moving lower, and State Street moving lower as well, down about 5%. But that actually is on the back of that weird rumor out there that apparently they were going to buy Credit Suisse, and then they came out with a statement saying, well, we're not going to comment on it. They didn't say whether they were going to do it or not. But anyway, this stock getting ping-ponged around as people try to figure out what the heck's going on.
And they've only just bought Brown Brothers Harriman, which they were quick to remind us.
Which they haven't settled.
Yeah, right. Exactly. Let's have a quick look at what's happening in the beautiful world of bonds that our Taylor so loves, because we're currently seeing that 10-year auction, seeing an above 3% yield offered, and it's pretty lackluster in terms of a 10-year auction, 33 billion being sold, and we are currently seeing the implications of that psychological level that is 3%. What does it mean for an S&P 500? In fact, a great chart coming from Pete Dioterra saying the market tends to, fall when yields go past 3%. The opportunity cost of not being finally in US Treasury is a little bit higher.
You know, it's interesting. It was great to hear from Andy Jassy of Amazon, right? Has a really good insight into what consumers are doing, and he was kind of optimistic. And I feel like, you know, the Uber CEO also speaking earlier from the summit, talking about being recession resistant. If you look at Uber shares, they're actually up in today's trade, in today's downward trend. But I do also think it's important, Tim, what we hear from these CEOs about what they're seeing when it comes to consumer spending.
Yeah.
And Khosrowshahi talking about services, consumer spending on services is still strong.
Yeah, Emily did ask him about the economy, and he didn't really give his idea of what the economy looked like and whether or not there would be a recession. But Andy Jassy did say that, you know, during economic cycles, during downturns, and reminded people that Amazon has lived through a couple of them, that people tend to go to change up how they buy products, and they choose companies that have done well by them. And he says that Amazon, of course, would be positioned to do well if there were to be such a downturn.
All right, if you missed any of those conversations from Bloomberg Technology, just check out our websites on live. All right, that's going to do it for, at least we'll be back in less than an hour's time. We'll continue to talk the markets on TV, on radio, and YouTube. Beyond the Bell, it's coming your way. We'll count you down to the close on this Wednesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic, and of course we'll catch up once again with our TV colleagues to count you down to the close. It is, though, an overall down day, but interesting to hear from two big players, particularly Andy Jassy of Amazon, right? Has so much what they can see in terms of what consumers are doing. Uber CEO, too.
Dara Khosrowshahi.
Right.
Yeah.
Also in terms of what, you know, consumers are spending on, and there seems to be some optimism.
There does, I know.
With caveats.
Yeah, kind of getting mixed signals.
Yeah, why do you feel that way?
Because on one sense, you know, we're hearing from Jamie Dimon that, and again, you know, as we were reminded last week by Larry Fink, that was just the, you know, one option, right? That this hurricane, that we have to brace for a hurricane. But we're also seeing companies lay people off. We're seeing some companies start to freeze hiring, rescind offers. But Uber not being necessarily one of those companies.
No, Khosrowshahi saying specifically doesn't anticipate layoffs at his company, but he's going to be cautious on hiring. You know, and cautious means you're probably, you know.
What does cautious mean?
Cautious means you're not going to maybe hire. You might not lay off people.
But you might freeze hiring. You might.
Right? Like there's a range.
Not necessarily grow at the same rate.
Yeah, exactly. And so, you know, is this the Fed's impact, you know, making its way through?
You know, last week we had the PayPal news, and PayPal's headcount just grew dramatically during the pandemic. And they did lay people off, but still, they're not at levels that they were at in 2019. They're still above those levels when it comes to headcount.
I think the world has to realize what we saw during the pandemic wasn't real. It was a reaction to the current environment. And so we're still waiting to see what post-pandemic life is really like.
Let's get to world and national news. Standing by in Washington, D.C. is Nancy Lyons. Hey, Nance.
Thanks, Tim. Gun reform continues to be the topic of conversation on Capitol Hill following the recent string of mass shootings. Among the voices heard today was that of Mia Cerrillo, an 11-year-old survivor of the Uvalde shooting in Texas. She gave pre-recorded testimony about how she tried to fool the gunman into thinking she was dead.
He shot my friend that was next to me, and I thought he was going to come back to the room, so I grabbed the blood and I put it all over me.
Cerrillo used her teacher's phone to call 911. Michael Bloomberg is the founder and majority owner of Bloomberg LP and is a donor to groups that support gun control. The Supreme Court says an armed man was arrested by police early today near the Maryland home of Justice Brett Kavanaugh. The Washington Post reports the man told officers he wanted to kill Kavanaugh. Senate Minority Leader Mitch McConnell addressed it on the Senate floor.
If these reports are correct, an assassination attempt against a sitting justice or something close to it. This is exactly the kind of event that many feared that the terrible breach of the court's rules and norms could fuel.
Senator McConnell is referring to the leak of a draft Supreme Court opinion suggesting the court is ready to overturn the Roe versus Wade decision on abortion. Harvard University President Lawrence Bachow says he plans to step down next year. He is credited with leading the school through the pandemic and examining its ties to slavery. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. And I'm just realizing I didn't do it, but maybe I should have put Twitter on my gainer list. It was
Not too late, Carol.
Yeah, but it's only up about 0.8%. It's off.
Be careful with that because,
earlier.
as I learned yesterday.
Darn you. Okay, so Twitter, we're watching that. We did see it spike on news that, Twitter's saying, Elon Musk, you want more internal data when it comes to bots? You got it.
Yeah, the Washington Post reporting that Twitter's board plans to comply with Elon Musk's demands for that internal data. They cited a person familiar with the company's thinking. Shares rose earlier in the session as much as 2.9%, though they did pair some of those gains. The stock did touch 41.29, that it's its highest since May 13th. Remember, 54.20 is that magic number for the share price.
We're not even close, are we?
Not even close, no.
So when you're watching like some kind of movie or drama and it's like about a court case and they're like, the opposing attorney's like, okay, you want data, you want to look for it, and then like they deliver like boxes and boxes of information.
Yes, that's what they're doing. That's what they're doing to Elon Musk.
Data will consist of more than 500 million tweets posted each day, the Washington Post
This is the fire hose. That's what it's referred to as.
Is it?
Yeah, it's Twitter's, internally and externally, I think it's referred to as the fire hose. It's their real-time data. And there are companies that have been built in the last decade and more to try to analyze that data, to look at the APIs, to try to get understanding for what's actually happening in the world in real time, like a company like Dataminer, for example, that a lot of news organizations subscribe to and use.
That's interesting.
So here's the raw data, Elon Musk.
Enjoy.
Figure out a way to make sense of it.
Meanwhile, we do want to mention that Twitter's top lawyer reassuring staff today that the deal to sell the company to Elon Musk is still progressing and that a shareholder vote will occur in late July or early August, according to people familiar with the matter. Company just waiting for the SEC to approve its proxy, after which it will be sent to shareholders. Twitter's head of legal and policy said at an employee meeting, according to those in the know. So
does it happen?
It's getting closer.
Does it